Hi everyone, this is the very first live session that we are conducting for the PM Success Batch of June 2026 attempt. So the agenda for today's session is going to be to revise what all you people have done in the previous week. So we started with our batch on Monday and today we are meeting on Saturday. So you people have fully completed chapter number 15 and chapter number 2, right? So you people, as you have just given me the update, you people are all done with these two chapters. So what we will do is we will first revise these two chapters and then we will move towards the practice part of these chapters also. So the very first thing, the very first chapter that we started with when we are starting the PM course for the June 2026 attempt was chapter number 15, which was all about performance measurement. So since most of you people have covered this chapter, can you let me know what all you remember studying from this chapter? Some of the topics, as my screen is presented, so some of the topics are already visible to you. But what all do you guys remember studying as part of this chapter? Please feel free to keep adding your points in the chat box, or if you want to unmute yourself, please go ahead and be interactive with me. What all did you people cover as part of this chapter? Okay, great. I have a response from Kia who says ratios, NFPIs, KPIs. That's great. What else? Okay, Neha says same. All right. So yeah, this is pretty much what we have covered as part of this chapter. We first understood that performance measurement. What exactly are we trying to do with this chapter? We are trying to understand that if the company has performed in a certain manner, how do I find out whether it's a good performance or it's a bad performance? So to measure the performance, I have to have a system in place. So what are the different objectives that I want to achieve? First, to prepare a system with which I will measure my performance. I'll find out whether people have done the work in the right manner or not. So I have to design measures which are consistent with my strategy. Strategy is the way with which I want to achieve the overall goals of the company. Then I will set the targets which are quantifiable. What do I mean by quantifiable targets? Something which can be given in the form of numbers. It's not subjective, it's not open-ended. For example, I am not leaving my target as I want to have a good customer service. I will quantify it that I want to have an average rating of 4 stars out of 5 stars. So this is the setting of quantifiable targets because it's easy to measure things in terms of numbers, but good quality, good service, it can differ from person to person. Vidya says, I did not start my PM yet, so should we begin with chapter 15? So Vidya, this is basically the first session that I'm conducting for my PM Success Batch students. They have started the course Monday onwards, and here we are meeting today to revise what all portions they have covered, and then we will practice. So the way that I have structured the Success Batches, I have started the course, the syllabus with the with chapter number 15 and not the very first chapter. So there's a reason why I follow this sequence, which I have told to the students who are a part of the Success Batch. So some of the video lectures are also available as a trial lesson. So you can probably go to the website and have a look at those trial lessons. If you've not already covered chapter number 15, this session might not make a lot of sense to you, but you're more than welcome to stay if you just want to see how we teach at BeingACCA. Right. Okay. So second is I was telling you people that I have to set quantifiable targets. That means I should be able to measure the things in numerical terms. Then the third objective is I will also have to develop the reward schemes. Why are reward schemes important? Because whenever people are working in a company, if you're giving them a constant source of motivation that if you achieve the target, you will receive this much bonus. So these schemes should be developed in such a manner that they motivate the managers to do the work on time and to do the right level of work. Similarly, you have to also, another objective is so that I judge my managers fairly. One manager should be evaluated in the same way as the other manager. If the performance evaluation is not fair, then the employees won't be motivated to work at the company. So these were some of the objectives that we have studied. As part of hierarchy, we have studied the different corporate terms, that mission is the main reason for the organization's existence. Objectives of the corporate is putting mission into practical terms. When I divide the objectives as the other objectives which I want to achieve, but it's not my main goal, I call them as the subsidiary objectives. And the objectives which I give to different departments of my company, different units of my company, they are called as the unit objectives. Then we moved forward to what are financial performance indicators. So whenever I want to measure the performance of my company, my company's employees, I have a look at the financial performance. So this is something which you guys may have also studied as part of your previous papers, the ratio analysis that we do. So ratios like return on equity, return on capital employed, gross profit, net profit, operating profit margins. So all of these ratios we have covered as part of this chapter. First of all, we studied return on equity, which measures that upon the investment that my equity shareholders have made, how much return they have generated. And then return on capital employed tells you that out of the total money which has been put into the company, how much profit has been generated in comparison to that money. Then we have the gross profit margin. The formula, I'm sure you people have come across it before, and if not, when you were covering the lectures, you people have already had a look at these. Then you have the net profit margin, the asset turnover ratio, the ROCE ratio, current ratio, which helps you measure the liquidity of the company, inventory holding period, receivables collection period, the payables payment period. These are mainly the working capital related ratios. Then another ratio to measure the liquidity of the company is a quick ratio. And then before we move forward, guys, can you people let me know what is the ideal ratio for the current ratio? Ideally, what is considered? Yes, absolutely right. It is 2:1. No, Janani, it is 2:1. When we talk about the quick ratio, what is the ideal ratio for the quick ratio of a company?
1:1.
Yes, that is 1:1. Absolutely right, you guys. So this is the financial performance that we have spoken about. Gearing ratio is also a part of it. Gearing simply means debt. So how much debt a company has taken in comparison to its equity, or in comparison to the total money that the company has from debt and equity, that is what we measure with the help of gearing ratio. And another ratio which we have studied is the interest cover ratio. So it basically tells you how many times does the company have the capacity, the capability to pay off the interest payments which are due for the company. So these were the different ratios that you people have studied as part of this chapter. Now, whenever you people are required to give a comment about the performance, so what you do is, first of all, you'll have a look at the bigger picture, that what are the ratios looking like. So you calculate a few limited number of ratios. Why am I telling you limited number of ratios? Because if you people get a 20 marker question in section C, maximum marks that you people will be getting for ratio calculation would be somewhere around 6 to 8 marks. What will be the remaining marks for? It will be for the analysis of the performance. So calculate only a limited number of ratios, and then using those ratios, analyze the reasons, interpret it, that why are the ratios looking like this? If the net profit margin has fallen, why has it fallen? So I am also giving you people some of the ways that which you can earn those evaluation marks, because students, a lot of you, what happens is calculations is something which most of you are able to do on your own. It's simple application of the formula. But where do you guys suffer the most? Where do PM students get stuck the most? It is when we are writing about the analysis part, the interpretation part. So I'm telling you these 4 steps that you people can follow, that how you can write the best of the comments. So the very first step that you do is you state what has happened. So for example, the profits of the company have gone up by 20%. So this will be my first sentence, that profits of the company are up by 20%. Now the second thing which I will do, the second step that I have to follow is state why that happened. So maybe the revenue went up by 10% and and many of my costs were fixed. So I was getting more revenue, but the money that was going out from my pocket in the form of cost, a lot of it was fixed. So I did not have to pay more fixed cost just because I was selling more number of units, because that's the nature of fixed cost, right? Fixed cost remains the same no matter how many number of units I am selling. So what happens is I got more revenue, my costs were fixed. As a result, my profits were able to increase more. So this is the reason that I have stated. Then the third step will be to also find out the link to the other items. So maybe my depreciation expenses have gone up because I was investing in good quality assets, but then my repair expenditure has gone down. So whatever money that I was spending on repair and maintenance, because now I'm getting good quality assets, I don't have to spend a lot of money in my repair expenses. And then the fourth and the last step will be to express an opinion, that what do you think about what has happened? So what had happened? Profits have gone up by 20%. So how do you express? Is it a good thing or a bad thing for the company, guys? Profits going up by 20%? What do you people think? Good thing or a bad thing for the company? That's a good thing. So that is what you will write in your opinion, that the increase of 20% is a positive indicator, indicating good performance about the company. And if, let's suppose in the question, it's telling me that the company operates in a competitive environment, then I can also say that even though the company is facing a lot of competition, still they were able to increase their profits. So this is an impressive feat that they have achieved. Right? So this is how I can frame a comment in a good manner. Definitely when we practice questions together, you people will also see how I actually apply these 4 steps to the questions that we solve and draft answers on our own. I see one question from Aman. Can you please explain how do you calculate the average inventory? So average inventory is very easy, Aman. You simply take the opening inventory and then you add the closing inventory to it, and then you divide the entire numerator by 2. So opening inventory plus closing inventory divided by 2 gives you the average inventory, right? Very simple. Okay. So guys, you people let me know, if I am only considering the financial performance of a company, is it something which will tell me the whole picture, or will I be missing out on something? If I only have a look at the numbers of the company, is it all that I need to survive in today's time, or do I need something more? Think and tell me, are just numbers enough? No, we have to consider the other factors also. So there are some of the weaknesses that we have with the financial performance indicators, because of which we need to consider the other factors also. What are some of the weaknesses or the problems? First of all, when I'm talking about my ratios, guys, they are calculated on the basis of year-end figures. So what I will do is, let's suppose I'm working at a company where if I buy a particular machine, then my costs can be reduced. It'll take some time, 3 years, 4 years, but my costs will be significantly reduced. But then if I want to buy a machine today, I need to spend a whole amount of money today, and the benefits will only happen in the long term. So if I know that my bonus depends on the profits, then I will not purchase that machine, because I know that if I purchase the machine, the profits will go down, the cash that the company is receiving will go down, and maybe my bonus will go down. So I would not want that. So when the performance of the managers is only evaluated on the basis of financial numbers, they focus too much on the short term and they compromise the long term of the business, which is not good. So this is one problem. Another problem is all the ratios that we have seen, guys, no place did we consider the quality of our product or service, how satisfied the customers are with us, the delivery of our services, as well as the after sales service. So whenever you people buy some refrigerator or some washing machines, they usually come with some sort of warranties or guarantees that if the machine breaks down within 1 year of your purchase, the repair is going to be completely free. So this is also something which matters to the customers. In the long term, if you are not offering these services, but your competitors are offering these services, then it is going to be a difficult thing for you to survive in front of that competition. Because where will customers go? Customers will always go to those businesses which are giving them the additional services, as many services as possible. So this is one more weakness. And another weakness is the ratios that we are calculating. Where are we taking the numbers from? The balance sheet, the P&L account. And those numbers come from financial accounting, the books of accounts, which has a very high chance of being manipulated. People can tweak the numbers. There are chances of window dressing and the different accounting policies that we have. Depreciation also, guys, if we talk about, can you people let me know what are the different methods of calculating the depreciation? Yes, we have the straight line method, we have the written down value method. So do you people think that the depreciation that I calculate using SLM, is it always the same as the written down value method? No. So depending upon which policy I use, the profits will differ. So there are chances that the managers can use, they can exploit these policies to manipulate the books of accounts, to do window dressing, making things look even better than they are, tweaking the numbers as per their convenience, what they want people to think about those numbers. So these are the weaknesses that we have with the financial performance indicators. That's the main reason why I have to shift to another type of performance measurement technique. So then we covered the concept of short-termism, or you can also call myopia. Myopia is if you talk about in the scientific language, it's basically a disease of the eye where you can see the things which are near you, but you're not able to see the things which are far away. So it's called as short-sightedness. I can see the things near me, around me, but I fail to see the things which are far away from me. So this is short-termism. What happens is whenever I have set the bonus of my managers depending upon maybe the profit. So what they will do is they will focus on the profit of this year rather than thinking about how the company can grow in the next 5 years or in the next 10 years. So this is the problem. We had discussed what are the reasons why this problem exists and how does it harm the business in the long term. Then we had studied that just using the financial performance indicators would not be sufficient. I have to use the non-financial performance indicators also. What can I use? I will be using some measures to find out about my quality, about how satisfied my staff are, so that I get a more balanced view about how the performance actually looks like at my company. So for that, we have learned two of the terminologies, the critical success factors as well as the KPIs. If I have to explain to a layman kid, what will you say, guys? What is the critical success factor? You can unmute and give me your answers. What do we mean by critical success factor? Indicators, targets, Neha says crucial in success journey. So I like Neha's answer better. Absolutely right, Neha. Critical success factor, as the name itself tells you, this is something which is important, which is critical for you to succeed. So the example that I would have given to you people in the lectures also would have been about a restaurant business. So if I open a restaurant, guys, what is that one thing which I do not get right? Nobody is going to come to my restaurant.
Food quality.
The food, the taste, the quality. So if that is bad, then no matter how good of an ambience I create, how good of the interiors look in my restaurant, nobody is going to come up, because ultimately, why do people come to restaurants? They come to eat. So if my food is not good, then nobody is going to come there. So this is the critical success factor, something which is extremely important if you want to succeed. Now, food quality, guys, or food taste, is it something which everyone will find the same? If you and I, all of us, we go to a restaurant together, is it necessary that all of us will have the same opinion about the food? No. Absolutely right, Yulia. It is subjective. I may like the food. So for example, if we go to a restaurant where spicy food is being served, so I really like spicy food, so I will definitely love that place. But maybe Yulia does not like a lot of spicy food. So Yulia will say the food is very bad over here. It's too spicy. I can't even eat it. So this is the subjectivity when it comes to quality. Now, if it's not possible to measure quality, what do? We find out ways so that I can find out whether the quality is good or not. So I convert it into KPIs. What are KPIs? KPIs are key performance indicators. So quality, as we were discussing, is subjective. So what do we do is we collect the feedback from the customers with the help of maybe some star ratings that they can give to us. So we ask our customers to rate us on the basis of 5 stars, 5 being the highest, 1 being the lowest. So customers can give a rating, how much satisfied they are, how much did they like the quality of the food. So KPIs, what are they? They are the measure that we use so that we can find out whether we have been able to achieve our critical success factors or not. So CSF is the thing which is important for me to succeed, and KPI is something which I use to measure my critical success factor. This is the main concept. A lot of students get confused. They think that CSF is the same as KPI. But what is the main difference? CSF is the thing which I want to do to succeed, which is crucial for me to succeed. And KPI is something which I use to measure my critical success factor. So this is the main difference. Then we have moved on to cover the advantages of the non-financial performance indicators, that they are easier to calculate, they can be provided quickly, they are more flexible, and they are lesser affected by the changes in the financial policy. So just because I change written down value to the straight line method, then whatever customer feedbacks I have been given, whatever staff satisfaction feedbacks I have collected, they are not going to change. And one more benefit is that the NFPIs, they are difficult to manipulate. You can make tweaks into the books of accounts, but can you change the customer feedback? Can you change the staff feedback? No. So manipulations are difficult when it comes to non-financial performance indicators. Then guys, we moved forward towards the quality related indicators, that how do I measure my quality? So quality control is when the performance quality control and quality assurance, these are two terminologies. A lot of people again get confused that they are the same thing. But quality control is when I am hiring quality inspectors. What do inspectors do? They check whether the things are right or not. So control happens after your performance is done. So once the food is prepared, then the quality inspector is going to check what is the quality of the food that is already ready and served. Then what do you mean by quality assurance? Assurance happens before the production has happened. So you have some meetings, you discuss with your staff that we will use better material. So you put procedures in place so that you can ensure a good quality. So this is before you are doing your actual production. Again, what is the main difference? Control happens after production is done. Assurance happens before you do the production so that the quality is going to turn out to be good. Then we had covered about the customer service improvement. What are some of the things that we can do if I want to improve my customer service? So I can give training to my staff so that they are able to serve my customers better. And I also give incentives to the staff if they are giving a good performance, if they are giving good services to the customers. So what do I tell? If the customers give you a 5-star rating, you're going to receive 20,000 rupees as the bonus. So these are a few things which as a company we can do to improve the customer services. Then guys, we spoke about what are the things that I should measure when I want to talk about my qualitative performance. So I should think about the quality of my product or service. I should think about how satisfied my customers are. I should also think about what the delivery looks like. So is the delivery process smooth? Is it on time? How many percentage of the deliveries are happening late? How many of them we are doing before time? This is also something which matters. And fourthly, it is the after sales services. So whenever the customer needs me after they have purchased the things from me, am I there? Am I helping them out with the required things or not? And last but not the least, we had covered about what are the difficulties that we face whenever we are setting the targets for the quality related areas. So definitely measuring of quality is difficult because again, it's a very subjective thing. Setting the difficulty level of targets will also be difficult. Why? Because if I set it at very difficult, then the managers won't be motivated. If I set it as very easy, then also they may lose their motivation. And the staff staff behavior also will be something which they will respond to with respect to the targets that I'm setting. So if the staff feels that I have set too difficult targets, they may revolt. They may say that this is a very difficult target. So with respect to quality, there are definitely challenges. But does that mean I should not look at the quality of my company's products and services? No. A company should always have a balance between both quality as well as quantity. So financial performance as well as non-financial performance, both are important for the success of the company in the long term. Right? So this is a quick recap of chapter number 15. Any queries that you people have from here? Do we have any doubts, any queries, guys? Are you all with me till here? Okay. Can I get some more confirmations? Aaron, Aman, Gina, Janani, Neha, Trishti, Yulia, Vidya? Okay, that's great. Great. So if you people do not have any queries, I have something which I would like to show to you. I have created another video for you people to watch, which will help you further revise chapter number 15 that we have just discussed. Allow me a moment while I share my screen.
So let's talk about how you really see what's going on inside a business. You know, it's kind of like going for a health checkup. If the doctor only checked your weight, they'd miss the whole picture, right? Well, it's the exact same for a company. Just looking at one number can be super misleading. Today, we're going to unpack how to measure business performance so you can get a really clear view of its health. And that brings us to the big one, the question that's at the heart of it all. Is profit the only thing that truly matters? I mean, your gut might just scream yes, but the real answer, well, it's a lot more complicated. And honestly, getting it wrong can cause some serious, serious damage. To get to that answer, we've got to understand what performance measurement is actually for. It's not about getting a good grade on a report card. The real goal is to make sure that every single thing people are doing, from the folks on the front lines all the way up to the CEO, is actually pushing the company toward its big long-term mission. And that alignment, it's built like a waterfall. It all starts at the very top with the company's mission, its whole reason for existing. Then that big idea flows down into real, practical corporate objectives. From there, it branches out to different divisions, and finally it lands as super specific, actionable goals for individual teams. Every single level has to feed into the one right above it. It's all connected. Okay, so the traditional way we've always checked in on these things is by looking at the company's financial report card. We're talking about financial performance indicators, or FPIs. You know these, they're the classic numbers everyone talks about, like profit and returns. All right, let's take a classic example. Return on capital employed, or ROCE for short. This one's a big deal. It basically asks for every single dollar you've put into the business, for things like factories and equipment, how much profit are you actually getting back? A high ROCE seems amazing, doesn't it? But hold on. This is where it gets a little messy. See, you can get a high ROCE in two totally different ways. The smart way, the good way, is to invest in cool new projects that actually generate great returns. But there's another way, the deceptive way. A manager can just put off buying that essential new piece of equipment. The number looks fantastic for the quarter, but it's slowly strangling the company's future. And here's another one you see all the time, gross profit margin. This just looks at what percentage of your money is left over after you've paid for the direct costs of whatever you're selling. It's a really important indicator of how profitable you are. And yep, you guessed it, this number can be played with too. The smart way to boost your margin? Innovate. Bring out amazing new products that people are excited about and will pay more for. The deceptive way, just move some numbers around on the spreadsheet. You can relabel a direct product cost as a general administrative expense. The margin looks better, but is the business actually any healthier? Nope. And this right here, this gets to the absolute heart of the problem with only looking at the financials. When all you care about is cutting costs in the short term, you start to ignore the things that actually build a great business for the long haul. The quality of your product, whether you deliver on time, and of course, if your customers are actually happy. So this brings us face to face with the main villain of our story today, a really dangerous trap called short-termism. It's a mindset that can, slowly but surely, just rot a company from the inside out. Short-termism, some people call it business myopia, is what happens when managers get totally obsessed with hitting the next quarterly number. They start making choices that look great right now, but create a total disaster down the road. And often, it's just to get a quick bonus or make the stock look good for a few months. And the damage this does is so real. It means you stop investing in promising long-term projects. You start cutting R&D and other things that build value. You see quality start to slip. You slash jobs and training. You freeze salaries, and then you watch all your best people walk out the door. It's a total race to the bottom. This whole race to the bottom just throws the entire business completely off balance. It's like trying to steer a ship by only looking at the water behind you. You have no idea there's a giant iceberg dead ahead. To actually survive and grow, you need a much more balanced view. So, if the financial numbers aren't the whole story, then what is? Well, it's time to look beyond that bottom line. It's time to introduce the hero of our story, non-financial performance indicators, or NFPIs. These NFIPIs are basically the antidote to short-termism. They bring back that balance we were just talking about because they focus on the things that actually drive success in the long run. They're not measuring past results. They're measuring the causes of future profit. So what are we talking about here? Well, we're talking about things like, how good is our product really? Are our customers actually happy? Are we delivering when we say we will? How's our customer service after the sale? And this one's huge. Are our own people happy and motivated? These are the real signs of a healthy business. Now, here's the thing. It doesn't matter if it's a financial number or a non-financial one. A good key performance indicator, a good KPI, has to pass a simple test. It needs to be specific, so everyone knows exactly what's being measured. It has to be measurable, of course, and maybe most important of all, it has to be relevant. It has to tie directly back to those big strategic goals we talked about at the start. So the solution here isn't to just throw out all the financial data. Of course not. That would be crazy. The goal is to build a smart, balanced system that pulls in the best of both worlds, using both the financial and the non-financial numbers to really steer the ship in the right direction. You see, a really healthy performance system isn't just a report you look at once a year. It's a living, breathing cycle of improvement. It all kicks off with your strategy. That strategy then tells you what you should measure. Those measurements then link directly to how people are rewarded. And finally, you review everything fairly, which gives you feedback to tweak your strategy. And the whole cycle starts over again, smarter than before. And this whole cycle really stands on 4 key pillars. First, you have to design measures that actually match your strategy. If you say you want the best customer service, then you'd better be measuring customer happiness. Second, you need clear, objective targets so everyone knows what they're aiming for. Third, and this is so important, your rewards have to encourage the right behavior. Link bonuses to that customer happiness score, not just to this quarter's profit. And last, you have to use this full, balanced picture to judge performance fairly. And really, that's the main takeaway here. Smart measurement isn't just about collecting a bunch of data for a fancy dashboard. It's all about what you do with that information, how you use it to learn, to adapt, and to constantly get better. So I'll leave you with a question to think about. Take a look at your own organization, at the reports and numbers that everyone pays attention to, and just ask yourself, what are the numbers not telling you? What's the really important part of the story that's being left out? Thanks for tuning in.
Okay, guys. So you saw the video. Did you like it? It was a quick recap of entire concepts that we have covered as part of this chapter. Yes? Okay, great. So I would also like to ask you people now, did you get a chance to practice from the Study Hub, the practice portion? Quizzes we always do as in when we are coming an end to a chapter. But did you people get a chance to do the practice portion from there? Okay, Aman says no. Yulia and Kia have done it. Okay, so Yulia and Kia, were you guys able to solve the questions that you saw over there? Okay, that's great. That's great. Some were tricky, so took time. Okay, so we'll do one thing. We will also be discussing these questions together. So this is the practice part in front of you. We are doing it for chapter number 15. 8 questions. Let's get on to these. The very first question is now in front of you. I'll just zoom in a little bit so that you people can see the questions clearly. Okay. So the question tells you Smithson Company is an insurance company. Recently, there's been a concern that too many quotations have been sent to the clients either late or containing errors. So whatever quotations that we send to our clients, they are either being delayed or there are mistakes that we are making in those quotations. Then further, it's been told to me that the department concerned has responded that they are understaffed, they are having lesser people than they need, and a high proportion of current staff have recently joined the department. So they are new employees. They do not know exactly how the things are supposed to work in the company. The performance of this department is to be carefully monitored. You have to tell which two of the following non-financial performance indicators will be appropriate to measure, to monitor and improve the department's performance. So I want to monitor the performance and I want to improve their performance. So have a look at at all of the options that are in front of you and let me know what do you think should be the answer over here. I would appreciate if all of you participate. It's okay if you give me incorrect answers. We are all here to learn. Just tell me what you think. It's totally okay to make mistakes. Okay, great. So I'm receiving answers. Most of you say that it will be A and C. That's also the right answer. But let's also discuss why A and C have to be the right answer. So statement A tells you percentage of quotations found to contain errors when checked. One of the main problems that we were facing is that the quotations that we are sending, they are containing errors. So if I want to monitor, if I want to help them improve, how should I decide their bonuses? How many percentage of quotations are having the errors? So this number should be as low as possible so that then the employees will be getting their bonuses. So with this measure, I am solving one of the biggest problems that we are facing at the moment. So this has to be one of my answers. If I have a look at option B says average time the staff have worked in the department. Guys, you people let me know. If I'm measuring how much time my staff is working in the department, will that help me whether they are containing the errors or not, whether they are sending the things late or not? Will I be able to measure any of these problems from here? Option B? No. So this has to be eliminated. Then if I talk about the third part, actual staff employed as a percentage of the quota for the department. So what was the problem? Another problem was their response was that the department is understaffed. So understaffed means they are having lesser people than they need. So what do? I keep a check on how many people are there in the quota. Quota means how many people are actually needed in that department to do the work. So I check that in comparison with how many staff are employed. So for example, I need 1,000 people in this department, but only 800 people work over here. So I will see that 80% staff is available. Of my requirement, only 80% staff is available. So even if the things are getting delayed, I would know that what is the reason behind the things that they are getting delayed. So option C has to be one of my answers. If I talk about option D, why this cannot be my answer. Option D says percentage of budgeted number of quotations that are actually issued. So here I am seeing that how many quotations are actually issued, but then again, it does not solve my problem whether it was issued late or on time and whether it contained errors or not. So none of my problems are getting solved if I use option D as one of my measures. So my right answers, guys, have to be option A and C. Are you all with me till here? Shall we head to the next question? All four statements understood? Why A and C are correct and C, B and D are wrong? Okay. Great. So moving forward to the second question now. Select the appropriate effect from the list below to show the impact of the following actions on a company's current ratio. So whenever I see current ratio, I will quickly recollect the formula in my head. It is current assets divided by current liabilities and the level of financial gearing. Financial gearing is all about debt to equity ratio. So debt in comparison to equity, that is measured using the carrying values. Carrying value mean whatever is there in the books of accounts. So the very first action that they have taken is they are raising a long-term loan to finance the purchase of non-current assets. So I want to purchase a non-current asset with me. Because of that, I am thinking to take up a long-term loan. So what do you guys think will happen to my current ratio here? It's going to be either of the three options that are provided. Either it will increase or it will decrease or it will have no effect. What do you people think will happen to the current ratio because of the first action that you see here?
No effect.
No effect? Can you give me the reason? You're correct, Aman.
Ma'am, if you have simply taken the loan for cash, then it should have increased our cash and current assets. So we should have increased. But now we are just purchasing a non-cash asset using a loan. So it has no
Absolutely
increase
right.
in asset or
Absolutely. Bang on, Aman. Very correct. So, what exactly is going to happen in this transaction? As soon as I take the loan, money will come into me. So, I will get money in the form of cash or maybe in my bank balance, it will increase. And then later, when I purchase the asset, the money will go away from me. So, in effect, I got some cash and then that cash went out. So, the current ratio is going to be unaffected because my current assets first increase, then they decrease by the same amount, and no change is going to be there in my current liabilities. Why? Because this is a long-term loan. So on my current ratio, there's going to be no effect. Then if I talk about the effect on financial gearing, what do you guys think will happen to my financial gearing?
increase.
Yes, absolutely. This is going to increase. Why? Because when I am taking a new loan, my debt is going to increase. So debt upon equity ratio will go up. Then, if you talk about the second action which they are taking, reduce the value of the closing inventory. So, closing inventory is one of my current assets. What will happen to my current ratio if I am reducing the value of my closing inventory?
Decrease.
This will decrease. Why? Because closing inventory is my current asset. So if my current asset is lesser, my numerator for the current ratio will be lesser and denominator will remain absolutely the same. So overall, my ratio is going to go down. I hope you people are familiar with the fact that whenever I want to evaluate the impact of any ratio, if the numerator increases, overall ratio will increase. If the denominator increases, overall ratio will decrease. So numerator has a direct relationship. Numerator increase, overall ratio increase, and denominator has an indirect relationship. So if denominator increases, overall ratio will decrease, right? And then if you talk about the effect on financial gearing, what will happen on financial gearing over here?
No effect. No effect.
Okay, any other answers? Anyone who thinks differently? Any other answers? Everyone believes this is going to have a no effect? Think a little bit more in detail. Okay, let's do one thing. Let's mark the answer which you people are telling me and see if you people are right. So you're absolutely right with the first three answers that you gave, but you people are incorrect with the last option that you have given. That is, it's going to have a no effect on the financial gearing. Now you know that the answer is that the financial gearing is going to increase. Now can you think of what could be the reason why the financial gearing will increase because the closing inventory has fallen down? Think, come on. What could be the reason? There's a change in the value of the closing inventory. Closing inventory value has fallen down. So why is my
Can I,
financial gearing? Yeah, go ahead.
like, as you said, is a indirect relationship with the denominator. When the numerator is increasing, the current assets, so the denominator is has no effect. Like, it should decrease. Like you said, can you understand what I'm trying to?
Um, Not really, but okay, let's try to discuss this together. Janani says the closing inventory will have an effect on the profit. So you're absolutely right over here when you say that, Janani. How do we explain this? Is if you see over here that when you are reducing the value of your closing inventory is a part of your net assets, right? So whenever you are trying to find out the value of equity, how do you find out the value of equity? You take your net assets, right? So net assets, if that value is decreasing, what is happening to your denominator? The equity value is decreasing. Debt remains the same. Denominator is decreasing. So if denominator decreases, what happens to your overall final answer? Denominator is decreasing. So the opposite happens to the overall final answer. It's going to increase. That is why my answer over here is supposed to be an increase. Have a look at the explanation that they have also given to you. The reduction in inventory will mean that your current assets will be lesser, because of which there will be a fall in the current ratio. Now, if you talk about the financial gearing, your net assets are falling down. So this will reduce the carrying value of your equity. So your denominator, debt to equity ratio. So debt divided by equity, denominator is falling down. So this will lead to an increase in your overall final answer. Ultimately, there's another reasoning that they have given. Alternatively, if you have a lower closing inventory, what will happen to your cost of sales? Your cost of sales will be higher, which will make the profits lower, because of which your retained earnings will be lesser. And if your retained earnings are lesser, who is the owner of the retained earnings? It's the equity shareholders. So they have a lesser value when it comes to equity. So value of equity is down. That means the financial gearing is going to go up and increase, right? This is the reason, along with the two actions that are going to happen, the effect that we have discussed on the current ratio as well as the financial gearing. Are you all with me on this? Clear till here, guys? Should we move to the next question? All clear till here?
Yes.
Okay, so let's proceed to the third question now. In the last year, the company's operating profit margin was 14.7%. Their asset turnover was 2.3 times. You have to tell me what is the return on capital employed for the company. This is very easy, simple application of one of the formulae that we have learnt. While you people solve, I'll also create a Excel sheet which we will use for all the workings that we do on numerical questions. We will do everything over here so that this will be a spreadsheet that I will give you people the access to. You can access this sheet whenever you want to come back to the numericals that we are doing. So this is the June 2026 attempt, right? So calculate for question 3 and let me know your answers. I am already starting to receive the answers. Great, great. Absolutely right, you guys. What's the formula that we have learned? ROCE can also be expressed as the product of both of these ratios, operating profit margin as well as the asset turnover. So my answer over here is going to be 14.7% into 2.3. 14.7% into 2.3, which is going to give me 33.81%, which is option C right in front of you. Right? Fairly simple. So I will take you people to the fourth question now. Yobo company manufactures a wide range of products. There is considerable variation in the profit per unit sold of each product. That means every product that I sell, the profit that I'm making per unit is different. The managing director is planning to introduce an incentive scheme for the production employees. The objective is to improve the product quality. So on which of the following incentive schemes should be based in order to improve the product quality? So you have different options given to you. If I want to improve the quality, should I look at production volume? Should I look at the sales revenue? Should I look at the level of rework? Or should I look at the profitability? Think and give me your answers.
The level of rework.
Okay. Great. So all of you agree that it's going to be the level of rework. Let's also discuss why it should not be the other options. So when I'm talking about volume means how many number of units have I produced. Nowhere it will tell me about the quality of those products. It could be 1 million number of units, but if the quality is not good, my purpose is not solved. Then if I talk about sales revenue, again, my revenue can be a high number, but does it guarantee that the quality was good? No. Level of rework tells you how many times you had to do the work again. So if the quality is improving, you will not have to work on the same thing again and again. So this is exactly something which will help you measure your quality. Again, with profitability, the problem is that it's a numerical number. It's a financial performance indicator. It tells you nothing about the quality. You can be having the worst of the quality, but just because you were able to reduce the prices, more number of people bought your product, but the quality they did not like at all. So level of rework will be the most appropriate thing to base the incentive scheme upon if I want to improve the quality of my product. All good? Should we head to question number 5? You're with me, everybody? Okay, so this is the fifth question in front of you. Which of the following targets is the most appropriate measure for the incentive scheme? So we are given information. Call-in company provides a call center service on behalf of a number of retailers. The operatives receive calls from customers who are experiencing problems in operating the products that they have bought from the company. The managing director is seeking improved customer satisfaction. This is the goal of the managing director. How do they measure customer satisfaction? It's measured by the number of customers who receive advice, which leads to the correct operation of their equipment at the first point of contact. So whenever they contact the company, as soon as they contact, they should be able to do the correct application, the correct operation of the product. It has been suggested by the human resource manager that an incentive scheme should be introduced. So what should be the target that we should give to the incentive scheme, people? So think and let me know about your answers. Okay, I am starting to receive answers, waiting for a few more. Trishni, Janani, Gina, Aman, Aaron, what are answers according to you?
C.
Okay, I can see that majority vote goes for B. Aman says C. So let's discuss what the right answer should be. Option 1 tells you reduction in the time taken to answer the incoming calls. So I want my customer satisfaction to improve. That means I want them to be able to get the thing working correctly in the first time when they are contacting me. So if I reduce the time taken to answer the incoming calls, I earlier used to take 1 minute to answer a call. Now I answer the call within 30 seconds. But does it tell you anything about whether the customer was able to use the equipment correctly or not in the first go? No. So this cannot be my answer. Option B says a decrease in the number of calls referred to a supervisor. So how do calls usually work? Firstly, the operatives are going to receive the call. Operatives will be the people working at the junior level. Now, if the junior level person is able to satisfy the customer, the call will be cut then and there. But if the customer's problem is still not resolved, then it will be transferred to a supervisor. So if there's a decrease in the number of calls that are getting referred to a supervisor, what does that tell you? That in the first contact itself, the customer was able to get the thing operating correctly. So this option B is exactly what I want to achieve in my company. Let's also have a look at option C. Option C says reduction in the average time taken to process each call. So for example, earlier I used to talk to my customer for 15 minutes and then they were able to use the thing correctly. Now I have reduced this time to 10 minutes, but then again, it does not guarantee whether the customer is able to operate the thing correctly or not. What is my objective? They should be able to operate the thing correctly in the first contact itself. Reduction in time taken is not what I want to do. I want them to solve the problem in the very first go, no matter how much time it takes. So time is not an issue. That is why option C cannot be my answer. And option D says increase in the number of calls that you're processing. No, my objective is to increase the satisfaction of my customers, which I measure on the basis of how many people are able to do the work correctly within contacting me for the first time. So option D again tells me nothing about whether they were able to do the thing correct operation or not. So option D also cannot be my answer. So that's why option B is the most appropriate measure for this particular incentive scheme. All clear? All options with reasons you people have understood why B is correct and A and C and D are incorrect? Should we head forward, guys? Aman, are you clear? Why option C is not the answer?
Yes, ma'am.
Okay. So now let's move forward towards the sixth question. Luca's company is structured on a functional basis. Functional basis means the departments that you have in the organization, they are divided on the basis of different functions, that what is the work that they do. So two of the departments that they have are purchasing and the production department. The directors wish to improve the product quality and they are considering the introduction of an incentive scheme. Which of the following performance measures will be appropriate basis for the incentive scheme? So should it be profit? Should it be favorable material price variances? Should it be the volume of products which are returned by the customers, or should it be my share price? Very easy. Give me your answers quickly.
C.
This has
Volume
to
of-
be option C. All of the other options that you people see, profit, variances, share price, they are all finance related. They are all money related. Only thing which is related to quality. What is my objective? I want to improve the quality. So the only option which is related to quality is how many people are returning the products back to me. So if the quality is good, they will not return. But if the quality is bad, customers will return. So if this is more, if the returns are more, I will understand that my quality is bad. And if the returns are lesser, I will understand that my customers are liking the quality of the product. Moving ahead to the second last question now. Binny company has annual sales of $960,000. Current ratio of 3.2:1. All of the sales are for cash. That means there are no credit sales. And the prices are at a markup on cost of 50%. So you people, are you guys aware of the two concepts that we use for profits? Markup as well as margin? Are you guys aware how do we calculate markup and how do we calculate the margins? No? So let's discuss this together. There are two ways in which a company can find out how much profit they want to make. So profit can be in the form of a markup or it can be in the form of a margin. So the company will say we want a 10% markup, or the company will say we want a 10% margin. Will the profit number look like the same in both of the methods? No. So when it comes to markup, markup is always based upon the cost and margin is always based upon the selling price. So for example, the product that I am selling, I have a selling price of $100 and I have a cost which is equal to, let's suppose, $40. So when I want a 10% markup, how much is my profit going to look like? My profit will simply be 10% of my cost. How much is my cost? It is $40. So I will make a profit of $4 over here. But when I'm calculating on the basis of margin, margin will always be applied on the selling price. So I take how much margin I want and I multiply that with my selling price of $100. So here, if I apply margin, my profit figure will be $10. And if I apply a markup of 10%, then my profit figure will be $4. Right? Very good. Yulia already knew the concept. So it's a quick revision for those who already know this. Clear, Neha? And everybody else, you're with me? Markup is always on cost. Margin is always on the selling price. So they are telling to you over here that the company is doing a markup on the cost of 50%. So if the cost is $10, they apply a 50% markup on the cost. So 50% of $10 will be $5. So how do they find out the selling price? It will be $10 plus $5. That will be equal to $15. That's the selling price. The average cash balance is $40,000. Inventory holding period is 90 days that has been given to you. Assuming that there are 360 days in a year, you have to calculate Binny's quick ratio, that is the acid test ratio. So this is a question wherein the information is given to you, but it's not served to you on a platter. Information is indirectly given to you. So you have to use your knowledge of the ratios to get to the numbers that you need for the calculation of your quick ratio. So take 2 minutes, solve and let me know your answers. Then we will discuss this together. Do we have any answers yet? Okay, so let's discuss this together. Those of you who were able to solve it, good. If you were not able to solve it, no problem. This is chapter number 15 that we are discussing. So I'll just label the sheets for you people's convenience. This is the practice portion that we are discussing. Now, this is question number 7 that we are solving together. So in question number 7, they are telling me that my annual sales are 960,000. I want to calculate the quick ratio and the current ratio has been given to me. So for the calculation of my quick ratio, I need two things: my liquid assets, my quick assets divided by my current liabilities. That's the formula. If current ratio has been told to me that it's 3.2:1, I can easily calculate my current liabilities if I know my current assets. So what I'll do is I'll try to find out how many current assets I have. In current assets, what do we usually have? We have the receivables, but the question has told me that all sales are for cash. That means I have zero receivables, or I have a cash balance, or I have a inventory. So these three are the main current assets which any company has. So receivables are zero, cash balance is given to me. I just need to calculate my inventory. So for that, do I have any information? Yes, I am given with the inventory holding period as 90 days. What's the formula? Inventory divided by the cost of sales multiplied by 360 should give me 90. So if I want to find out the value of inventory, I need one thing, that is the cost of sales. Can I calculate my cost of sales? Absolutely yes. I am given with my annual sales and they have told me how much is my markup. So guys, we all know right from the childhood, we know that selling price will always be equal to cost plus the profit. Right? This is the equation which we have been learning right since the beginning. So if they are telling you in the question that the profit is going to be a 50% markup on cost, that what can I say? Profit will simply be equal to 50% of the cost. So I can rewrite this equation. Selling price will be equal to cost plus. Now, just now we have discussed that profit can be written as 50% of cost. Right? So now when I reframe this, this will be cost plus 50% of cost. So this will simply become 150% of the cost. So whatever is my revenue, this is 150% of my cost. So if I want to find out the cost, it will be revenue divided by 150%. So the cost, if I want to calculate, revenue is given to me as $960,000 divided by 150%. So this tells me $640,000 is going to be the cost of my sales. Right? Now that I know my cost, I can use this in the inventory holding formula. So inventory holding period, the formula that we have learned is inventory holding period will be equal to inventory divided by the cost of sales multiplied by 360. Right? So inventory holding period is given to me as 90. 90 is actually equal to inventory is something which I want to find out divided by cost of sales I've just found out is $640,000 and this number multiplied by 360. This is how I can get to my answer. Now I can very well find out the value of my inventory. How can I do that? Simply transpose the things to the left hand side. So 90 you take as it is. 360 is getting multiplied here on the right hand side. So on the LHS it's going to be divided. Right? This is what I am putting in brackets. Further, 640,000 is getting divided over here. So on the LHS, it's going to be multiplied. So this way, I will be able to find out the value of my inventory. So that means this company has $160,000 worth of inventory. Now I have everything that I need. My cash balance is 40,000. My inventory is 160,000. I have no receivables. So now I know the total of my current assets. My current assets will be inventory plus 40,000 of the cash balance that I have. So my total current assets are worth $200,000. Further, they have told me that I want to calculate the quick ratio. So for the quick ratio, how do I calculate the quick assets? It's everything apart from inventory. So I know my numerator is going to be 40,000, but for my denominator, I need my current liabilities. How can I get to that? I can use the current ratio that's been given to me in the question. So the current ratio is 3.2:1. Current ratio is equal to current assets divided by current liabilities. 3.2:1 is equal to current assets divided by current liabilities. 3.2 is equal to current assets I already know are worth $200,000 divided by my current liabilities. So how can I find out the value of my current liabilities? Current liabilities will simply be equal to 200,000 divided by 3.2. So I find out that my current liabilities are actually worth $62,500. Now I have everything for my asset test ratio or the quick ratio formula. The formula is simply quick assets divided by the current liabilities. Quick assets is nothing but the cash that I have with me, which is $40,000, divided by my current liabilities of $62,500, which gives me my ratio at 0.64:1, which makes option B as my final answer. Right? So I received some of the answers from you guys also in the chat box. Great. Those of you who have been calculate this on your own, that's very nice. In case you were stuck in any of the steps, this is where you can come back to. Do you have any queries, any steps that you people want me to repeat? Please let me know, guys. Any doubts here? What part is not clear? Please ask me. I'll be happy to help you. Also, please rename yourselves when you join your classes. Rename yourself with your enrolled names so that I know who am I talking to. Others all good? Aaron, Aman, Gina, Janani, Kia, Nia, all clear?
Yes.
Okay, great. All right. So let's proceed further towards the last question pertaining to this chapter. This is telling you that Mouse Company has a current ratio of 1.6:1. Inventory represents 30% of the current assets. Mouse Company has no positive cash balance, but it does have an overdraft. So the cash balance, which usually is a positive balance with the company, it's rather an overdraft for the Mouse Company. Overdraft means I will have it in the current liabilities section. If I am selling half of my inventory for cash at a markup of 100% and I use those proceeds to reduce my overdraft, what will be the current ratio for the company? You have to give your answer to 2 decimal places. Again, this requires you to use the concepts that you have studied. Information is not directly given, but indirectly everything that you need to solve this question has been provided to you. So take 2 minutes, calculate, and let me know your answers. Then we will discuss this together.
So let's product, whether you deliver on time, and of course, if your customers are actually happy. So this brings us face to face with the main villain of our story today.
Any answers yet? Okay, great. I'm starting to see your responses. Waiting for a few more, then we will discuss this together. 10 more seconds, guys. Okay, so let's discuss this together. We had to calculate what the new current ratio is going to look like. Presently, the current ratio looks like 1.6:1. So whenever guys you have to solve questions like this, it's the best to use the imaginary numbers for your calculations. So this is question number 8 that we are discussing together. I am given that my current ratio right now is 1.6:1. So let's do one thing. I know that current assets divided by current liabilities is equal to 1.6 divided by 1. So what I do is I assume that my current assets are worth $160 and my current liabilities are worth $100, right? So when you do the working, when you divide 160 with 100, you will get the same answer, 1.6:1 as your current ratio. So these are random numbers which I am assuming. Now what I will do is I will see the impact of the transaction that is happening. What is the transaction? I am selling half of my inventory for cash at a markup of 100%. So firstly, I need to find out, to know how much is half of my inventory. I need to know how much is the total inventory that I have. So I am given information about that in the question. Inventory represents 30% of my current assets. So if my current assets are worth 160, how much will be the value of my inventory? It will be 30% of 160. That means I have inventory that is worth $48, right? This is my total inventory. Now the transaction which is happening right now is I am going to sell half of my inventory for cash. So half of inventory will be $48 divided by 2. That is, I am selling $24 worth of inventory. What am I selling it at? I am selling it at a markup of 100%. Markup is always applied on cost. So if my cost is 24, how much am I selling it at? I am going to sell this inventory at a markup of 100%. So the cost which I have is 24 plus 100% of cost. 100% of 24 will be 24 itself. So that means the sales that I will be generating over here will be worth $48. So now I am going to sell this, and this is for cash. So that means my cash balance is going to increase. How much cash I'm going to receive? I'm going to receive $48 worth of cash. And how much will my current assets look like right now? I used to have $160 worth of current assets, but now I have sold off $24 worth of inventory. I will be receiving the cash also. I am receiving $48 of cash. But right now, what am I going to do with this cash? It's given to me in the question that the cash that I'm going to get, the proceeds that I'm going to get, they will go towards reducing my overdraft. So let's talk about what my current liabilities are going to look like. I had liabilities that were worth $100. Now the amount of money that I have received as cash, how much money have I received? $48. I will take this money from my customer and I will deposit this into the bank. So earlier I used to owe the bank $100, but now I will owe them $48 lesser. So how much will I owe to the bank? I will owe them $52. So now what what is going to be the revised current ratio? The current ratio will be 136 divided by 52, which if you want to round off to 2 decimal places, it's going to look like 2.62, which is what we are going to enter over here, 2.62. So this is what your answer will look like. Again, I will tell you people what steps did we follow. We just randomly assumed the numbers as per the ratio. We told that current assets divided by current liabilities were 1.6 divided by 1. So according to this ratio, I have cooked up my imaginary numbers that my current assets will be 160, my current liabilities will be 100. So when I divide 160 with 100, I will get to the exact ratio which is given to me in the question. Then what did I do? The transaction which was happening, I had a look at that transaction. So firstly, it told me that I'm selling half of my inventory. How much inventory do I have? For that, I need to find out the inventory that is represented by 30% of my current assets. So what did I do? I calculated my inventory on the basis of 30% of $160. So I found out that my total inventory was worth $48. From that, am I selling the whole figure? No, I'm only selling half of my inventory. So I'm selling inventory that is worth $24 to me. But from my customer, I am charging a higher price. How much am I charging? I am charging 100% markup. So if my cost is 24, I am taking the cost the same amount as profit also. So that means my selling price is $48. So now the customer will give cash to me. I will receive cash worth $48. I owed the bank $100, but now I will deposit the bank $48. That means now I still owe the bank just $52. And what happens to my current assets? Everything remains the same. It's just that inventory which I am selling away will be reduced. So how much worth of inventory I am selling? I am selling $24 worth of inventory. So 160 minus 24. Then I have my current assets, I have my current liabilities. Simply dividing the assets by the liabilities, I get to my final answer for the quick ratio. Understood, guys? I see a correct answer from Kia. Trishni, Aman, did you guys realize where you were going wrong?
Yes, ma'am. We have added the current asset, cash in the current assets.
Yeah, so it's given to us in the question that this money will be used to reduce the overdraft. That is why we are subtracting the money received in the liabilities section, right? So that's why our answer will look this way. I hope you all are with me in these workings. Any doubts, please ask me, guys. Are you all good till here? Aaron, Gina, Janani, Neha, all good? Yulia? Okay, great. So guys, with this, we have revised chapter number 15 and we have also completed the practice part from the study hub for this particular chapter. Now, as part of today's agenda, we also have to revise chapter number 2 together. So you people let me know, do you want to take a quick 5 minutes break before we continue further, or are we good to continue? Let me know. Do you guys want a short quick break, or are we good to proceed further? Chapter 2 is what we will revise. We will revise the concepts and we'll practice some questions together. Then we will call it a day. Let me know. Okay, let's go and take a 5 minutes break. All right. It's currently 11:25 by my clock. We will resume sharp at, okay, it's 11:26. So we'll resume sharp at 11:31, sharp 5 minutes. Okay, whichever time zone you're in, don't get confused. Just set a timer for 5 minutes. That is when we are going to resume. So now we are heading towards the revision for chapter number 2. This was cost and management accounting. Again, like you people have told me that most of you have covered this particular chapter. So can you let me know briefly what all topics, what all concepts do you remember studying from here? What are the things that we have covered as part of this chapter? Some of them are already visible to you on your screen. We first started off this chapter by doing a differentiation between management accounting and financial accounting. Yes, right, Kia. We learned AC, that's absorption costing. We learned ABC, that's activity-based costing. And we learned MC, that is marginal costing. So you people are right. This is what we have done as part of this particular chapter. So first of all, we started with the difference between management accounting and financial accounting. A lot of people confuse themselves that this is the same thing. But is it the same? No, they are both different. Management accounting, as the name itself is telling you, it's all about the accounting that's done for the management, for helping them take their decisions, for planning for the future. That is what we do it for. There are no compulsions that the company has to present this information to outsiders. This is only for the managers. So they decide which format they want to see that information in. But when it comes to financial accounting, that's preparing the books of accounts for the company. And for a listed company, it's completely necessary for them to publish their books of accounts publicly, get the audit done publicly, and then publish those results also. And here we have a set format which is set using the law, the IFRS standards, the international accounting standards. And the way that we do the workings is completely in respect to following for all of these formats. And mainly who uses this information? It's used by the investors, it's used by the tax authorities, the rules and regulation authorities, so on and so forth. Then we covered the concept of marginal costing and absorption costing. There's one main difference when it comes to marginal and absorption costing. What is that one main difference? We all know that whenever we are talking about the costs for a company, the total cost can always be divided into two parts, the fixed cost as well as the variable cost. So the two methods that we have considered, that we have learned over here, marginal costing. What all cost does the marginal costing concept cover? What all costs are included? Only variable costs are included. And when it comes to absorption costing, like the name itself is telling you, what all costs will be included here? Fixed as well as variable. Both costs are going to be included. Yes, everything should be absorbed into the cost of the product. So people are absolutely right. We came to 3 steps over here to do 4 steps rather when it comes to absorption costing. First, we do the allocation. That means whatever overhead expenditures have happened, we divide them to the different cost centers. So how much money the production department has spent, how much money the marketing department has spent, so on and so forth. And this can be different from organization to organization. Then we do the apportionment. So if money was spent because of 2 departments combined, so maybe we have a canteen. This canteen serves the food to employees who are working as part of production department, as well as employees who are working as part of maybe the marketing department. So if I am spending $50,000 in the canteen, I cannot simply say that all of this all of this is because of the production department or all of this is because of marketing department. So they have both shared this cost. So then we divide this on the basis of how much money was spent because of which particular department. So maybe if the production department had 20 employees, marketing department had 30 employees. So how can I divide this cost? We will say that this total cost of 50,000 was spent on the production department. It was worth 20,000, and on the marketing department, it was worth 50,000. So this is how we divide whenever it's a shared cost that is common to more than one center. Then we do the reapportionment. If at all there's another service center that is using some of the cost, then service center has to be taken back to the product that we have. So for example, the production department within themselves, they have this entire cost is supposed to go back to the production department. So this 30,000 that we have absorbed as part of marketing, this will also go somewhere in the production department itself. And then we do the absorption part. What is absorption all about? The total overheads is calculated and then it is divided by the number of units to find out how much is the overhead cost that is related to per unit that's been produced at the company. We have also discussed numerical examples when we were covering the concepts via the lectures. Further, the next concept that we have studied as part of this chapter is ABC, activity-based costing. Here, what is the core principle? That whatever is the reason because of which the cost is being incurred, it should be charged for on the basis of the reason why costs are incurred. So for example, if 4 of you go out to have a pizza, so let's suppose 4 of the students who are here in the session today, let's suppose Aaron, Aman, Gina and Janani, they all go to have pizza, right? So this pizza had 4 slices. This pizza in total cost them, let's suppose $100, right? So all 4 of the friends went out, but maybe Aaron was not feeling very hungry. So Aaron did not eat his 1 slice of pizza. So Aman ate 1, Gina ate 1, and then Janani ate maybe 2 slices of pizza. So then when the bill is going to be presented, will that be fair that everyone pays $25 each? Will it be fair that Aaron, even though he did not eat anything, he will also have to pay $25? Will that be fair? No. So whoever has incurred how much ever worth of expenditure, they should be charged that amount of money. So if Janani end up eating 2 slices of pizza, she has to pay for the 2 slices that she has eaten. 1 slice is worth $25, so she has to pay $50. Aman will pay his share of $25. Gina will pay her share of $25, and Aaron will not have to bring out even 1 single penny from his pocket. So this is the concept of ABC. You find out the cost driver. Driver is the reason why that cost is happening. So if there are repair expenses in a company, so what will it depend upon? The number of times you got the repair service done. So the more number of times you get the repair service done, more will be the expenses. So if there are 2 departments, A and B, there were total 10 services that we have paid for. 5 of them was because of department A, 5 of them was because of department B. So if every service is charged $1,000, then department A will have to pay $5,000, department B will have to pay $5,000. But if it was 4 or 6, it was 3 or 7, then again it will be divided accordingly. So what are the steps that we follow? We identify the major activities which create the cost, then we create a cost center, then we determine what is the reason why that cost is happening, then we find out the absorption rate, then we find out the total overhead cost, and then we are able to calculate the overhead cost per unit. Once I know the total of the overheads, I will simply divide it by the number of units to find out the overhead cost per unit. What are the advantages with ABC? My decision making will be better. I can find out more accurate prices about my products. I will get to know what exactly is causing the cost to happen. So if I'm worried that this year we spent a lot of money on repairs and maintenance, so with ABC, I will get to know why is that money so high this year, because we had to call the repair and maintenance services person multiple times this year. So the more number of times you call them, more you have to pay to them. So I understand where exactly my money is going. Why am I spending this much amount of money? When I know where I'm spending money, controlling the overheads also becomes easier. So for example, if let's suppose whatever expenditure that you people have, your income, your salary will usually get credited to your bank account. So once your salary arrives, you start to spend your money in different places. You go for groceries, basic utilities, some of the, expenses that you incur for your enjoyment, for your recreation. So all of that you keep spending, and at the end of the month, it's all gone. So if let's suppose you were taking a note of it, that this much money I've spent here, this much money I've spent here. So compare 2 scenarios, when you were just mindlessly spending, or one where you were taking a note of everything. This much money went for clothing, this much money went for groceries. So when you know where money has been spent, then you will be able to control it better also. That this time I spent this much money on clothing, I can reduce this number from the next month. So this is how control also becomes easier. And also my performance measurement will be better, it will be more accurate, because I will know exactly how much amount of money was spent because of which department. So when I manage their performance, when I see how well a person has performed, that thing is also going to be more better. The right people will be getting the rewards, and the people who have done poor performance, they will be treated accordingly. So these are some of the advantages, but then it again has some of the disadvantages also. First of all, you will need a huge amount of money to set up ABC in a company which is not already using ABC. It will also take time to do that setup. So setup as well as the admin related expenses, and still it is based on the budgeted overheads of your current period, which may be unsuitable for your future decisions. Why? Because whatever you are budgeting today, budget is a plan for the future. Is it necessary, guys, that whatever you have predicted for the future, you have done the absolutely right prediction? Is it possible that you can predict the future completely with 100% accuracy? No. So this becomes a disadvantage, that when I take my decisions on the basis of my budgeted overheads, my future decisions can go incorrect if in the first place my budgeted number was incorrect, right? So these were the disadvantages. Then another disadvantage that we had was it is more complex. Selecting the cost drivers may be difficult. Sometimes it's possible that if a cost is being incurred, there are two reasons because of that cost is being incurred, and not all costs will be easily identified to the cost pool. So sometimes I'm not able to directly find out or place a finger why exactly that cost is being incurred. So if I'm not able to find a driver, I will have to use some random driver which I select on the basis of my judgment, and my judgment can be wrong also, which will give me a wrong price that I calculate using ABC. That is why this is a disadvantage. We also saw how ABC is something which is very useful in the public sector. What is the public sector? This is the government bodies, right? So government departments. Sorry. Why is ABC useful over here? Because here, because of using ABC, the funds that the government bodies have, whose money is it? It's the taxpayers' money, right? So it should be used in those places where it's giving you the greatest benefit. So if we are using ABC, the funds will be more efficiently placed in the places where it's actually benefiting the people. Building a hospital over maybe a highway will be a priority for the country, because hospitals, treating the patients, treating the citizens should be more important for the government. So allocate the funds directly where they are needed. Reducing the overall spending, definitely we saw that the ABC can also help you control your expenses. It will not directly do it, but it will help you control your expenses. So this is also one benefit that we will get because of using ABC in the public sector. I will reduce the money that's being spent in the economy so that it's channelized to the most productive users, and also it will encourage the public sector bodies to become more responsive to their customers. Why? Because you're finding out the reason for every cost that is being incurred. So when your customers come and ask you, why are you charging us this much amount of money? You can give them a clear bifurcation that this is the cost that we are incurring. Hence, this is the price that we are charging from you. So this is how ABC is also particularly useful in the public sector. Right? Then last but not the least, to conclude this chapter, we had covered the concept of the difference between the traditional costing, like how it has been working over the past years, past decades, versus now most of the organizations are switching to ABC. So what's the difference? Traditional costing uses random absorption factors. It's based on number of units, it's based on the labor hours that it took you to make that. So this is a standard thing which you use for all of your overheads. How do you find out the overhead rate in the traditional costing? You simply take the total of all of the overheads, and you divide that by the number of units. But how does it work in ABC? In ABC, you first break down the total of the overheads that you have incurred. You find out how much money was spent where, and then you further find out what was the reason why that cost was incurred. So you find out the cost drivers, and then on the basis of those cost drivers, you divide the cost accordingly in the proportion which it deserves to be distributed. So if Aaron did not have a slice of pizza, he should not have to pay for that pizza. That's the concept of ABC. So it's a more fair way of doing the allocation. It gives you a more realistic price that you can find out for your product. The cost will be realistic, so you can set a realistic selling price also for the product. So this is the main difference between traditional costing and ABC costing. Any queries, any concerns still here, guys? Are you all with me on chapter 2?
Yes, ma'am. I have a question. Like yesterday, I was practicing ABC and activity-based questions, specifically objective types from Study Hub as well as from Exam Kit. Okay,
Okay.
so over there, questions comes up like either compare between the two costs, like increasing, decreasing format, or sometimes they say ki calculate one or calculate the other one, and then compare like on a overview based, or sometimes they are asking just one cost, but sometimes I'm getting confused between the two, like where they were asking for ABC, I was calculating the absorption, like it happens simultaneously. So
Okay,
i'm
so
i'm
for
still.
that, you have to read the requirements very carefully because it's given in the question what method you have to use. If they want you to do the workings as per ABC, they will give you in the requirement clearly that using the activity based costing, what is the cost per unit. And if they are not specifically mentioning ABC, then for the other methods, they can probably say using traditional costing or using the current method which the company is using. Don't worry, Neha, this will definitely get better with practice. We are also going to move towards the practice once we are through with the revision. So any doubts that you people have conceptually, please let me know. Then numerically, we are going to practice some questions together. And still, Neha, if you have doubts in particular questions, you can send them to me over the WhatsApp group or to me personally, and I'll be there to help you out. Right. Okay. Any other queries, guys? Are we good to proceed from here? Aaron, Aman, Gina, Kia, Neha, Yulia, Trishni? Yes, all good? Okay, great. So for this chapter also, I have prepared a revision video for you people. So I'll just take you people there now.
Hey everyone, and welcome. Ever thought about what's really going on behind the scenes at a company? Today, we're pulling back the curtain on the numbers that drive, well, pretty much every single decision they make. Let's dive into management and cost accounting. Okay, so just think about the phone in your pocket for a second. You know what you paid for it at the store, but have you ever wondered what it actually costs to produce? I'm talking everything: the materials, the people who assembled it, even the electricity for the factory. How on earth do they figure all that out? Well, believe it or not, answering that exact question is what this is all about. And let me tell you, this is so much more than just counting beans. You can think of it as a company's financial GPS. It's the system that guides every single move they make. So here's our game plan. We'll kick things off by exploring the two different worlds of accounting. Then we'll look at the tools managers have at their disposal. After that, we'll get into some traditional costing methods, check out a more modern and precise way to do it, and then wrap it all up with the good old cost-benefit analysis. Okay, first things first, it's absolutely crucial to understand that not all accounting is the same. In fact, you can basically split it into two completely different worlds. On one side, you've got financial accounting. The easiest way to think of this is as the company's official report card. It's what they show to outsiders, investors, banks, regulators. Then, on the other side, you've got management accounting. This is the secret internal playbook, meant only for the eyes of the team running the show. And this chart breaks down those differences perfectly. Financial accounting is all about the past, looking back at what happened over the last year. It has to follow super strict rules because, again, it's for outsiders. But management accounting? That's a whole different ballgame. It's for the insiders. It's flexible, it looks at the past, and tries to predict the future, and its entire purpose is helping managers plan, stay in control, and just make better decisions. So, now that we get the difference, let's zoom in on that insider's world. What exactly is in this management accounting toolkit? What's it for?
I really like this visual because it shows you exactly what's happening. All this data, all these reports, they aren't just being collected for fun. They are all funneled directly towards helping the people in charge achieve three very specific, very critical goals. And here they are, the big three. Planning, which is all about setting goals and figuring out where you want to go. Control, which is about monitoring your progress to make sure you're on track. And decision-making, which is choosing between different options to get there. That's it.
Every single piece of information serves one of these three purposes. All right, so we've covered the why. Now let's get into the how. This is where it gets really fun. How do companies actually calculate the cost of a product? We'll start with the classic, old school methods. The two main traditional approaches are called marginal costing and absorption costing. And really, the biggest difference between them comes down to how they treat fixed costs, stuff like the factory's rent. Marginal costing keeps those costs separate. Absorption costing, on the other hand, tries to absorb a little piece of that rent into the cost of every single item made. This gives us a great look at marginal costing. The cost of one single unit, let's say our smartphone, is just the direct stuff, the materials, the labor, the direct expenses. All the fixed overheads, like the factory building itself, are just treated as one big expense for the period, completely separate from the cost of the phone. Now, absorption costing, well, it's a bit more involved. It's a whole 4-step process to make sure every product carries its fair share of the factory's overhead. You start by allocating direct overheads. Then you apportion or split up the common costs like rent. After that, you reapportion costs from support departments to production. And finally, you absorb that huge grand total into the units you make. As you can see, it's a much more complicated way to get to a number. But what if just splitting rent based on floor space isn't really that accurate? That's the exact question that leads us to a more modern, more precise approach, activity-based costing, or ABC. The whole idea behind ABC hinges on this one concept, the cost driver. Instead of just using simple things like labor hours to spread costs around, ABC asks a smarter question. What activity is actually causing this cost? Is it the number of times we have to set up a machine? The number of orders we have to place? Those activities, those are the cost drivers. Now look at this. It's a completely different way to see things. Instead of one giant bucket of fixed overheads, we now have these separate cost pools. Each pool holds all the costs for one specific activity, like machine setups. So our smartphone's total cost is now calculated based on how many of these activities it actually uses. A complex product that needs a lot of setups will now carry a bigger piece of the overhead cost than a simple one. It's just so much more accurate. So the process for ABC is pretty logical. You identify the key activities, you create a cost pool for each one, you figure out the cost driver for each pool, and then you use those rates to assign the overheads to each product. It's very systematic, but you can probably tell it requires a lot more analysis up front to get it right. And that brings us to the million-dollar question. We have this really powerful, really precise tool with activity-based costing, but does that automatically mean it's the right tool for every single job? Let's be real. More complex and more accurate usually means more expensive and more time-consuming to set up. So you have to ask yourself, is all that extra effort really worth it? And here's the classic trade-off. The pros are obvious. You get much better information, which leads to better decisions and better cost control. But the cons are just as real. It's complicated, it costs real money to implement, and sometimes just picking the right cost drivers can be incredibly tricky. So why do we care about all this? Because getting the costs right isn't just some academic exercise. It has a massive impact in the real world, and not just for companies that manufacture things. Take the public sector, for instance. By using ABC, governments can figure out the true cost of providing services. This helps them spend taxpayer money more efficiently, find areas to cut spending without hurting service, and ultimately be more responsive to the citizens they serve. So, at the end of the day, the crucial point is this. Whether you use a traditional method or a modern one like ABC, understanding costs isn't really about getting a number. It's about getting the insight you need to make smarter, more strategic decisions. So I'll leave you with a thought. The next time you buy a cup of coffee, think about it. Beyond the actual beans and the milk, what hidden activities drove that price? The machine maintenance? The time it took to process your payment? The customer service? Once you start seeing these cost drivers everywhere, you'll see the world just a little bit differently.
Okay, so are you guys ready to do the question practice now? Got on another short of revision for chapter number 2? Did you people like the video? Yes or no? Okay, great. So let's get on to the question practice for chapter number 2 now. Here is the first question in front of you. Curtis runs a printing business. He estimates that his printing machine will need to be set up 200 times per month at a monthly total cost of $80,000. Item 2145 has to be printed in batches of 50 copies, where each batch will require the machine to be set up twice. Curtis expects the annual demand for item 2145 to be 50,000 copies. You have to give the answer that what amount should be charged to each copy of this item for the setup related cost, and you have to give me your answer to the nearest dollars. So take 2 minutes, solve this, give me your answers, then we will discuss this together. Okay, great. I have the first answer from Kia. 10 more seconds, then we discuss this together. This is very easy. Once I show you the calculations, you'll think, oh, this was so easy. Okay, let's discuss this together. We have to tell how much money we should charge for each copy, right? It's telling you, the question tells you that we will be having a total monthly cost that is $80,000, and this is for 200 times that we will be doing the setup. So with this information, I can find out the cost per setup. So this is chapter number chapter number 2 that we are discussing. This is the practice part, and this is the very first question. So they are telling me that 80,000 is the cost when I'm doing the setup 200 times. So what is the setup, or you can say the cost per setup? Cost per setup is going to be equal to 80,000 divided by 200. Right? Further, I have to give my answer that how much money we should charge to one copy. The information in the question tells me that this has to be the item that we are talking about. This will be printed in batches of 50 copies. So in one batch, how many copies will be printed? 50 copies will be printed, where one batch is going to require the setup to be done twice. So that means how much will be the cost of setup per batch? Cost of setup per batch. So I need 2 times the setups to be done. So if one setup costs me $400, then 2 setups will cost me $800. So in one batch, I am spending $800 in total. I have to tell how much money I will be charging to each copy. Now in one batch, I am producing 50 copies. So what will be the cost per copy? cost per copy is going to be, this is the money that I'm spending for 50. So per copy, I am spending $16. So 1/6 is what I will enter over here. And this has to be my answer. Great. I see some more responses. Neha, Aman, you people are absolutely right. Are you all with me on the first question? Shall we head forward? This is the numerical working. All with me till here? Okay. So we move ahead now to the second question. What is the warehousing cost for the first day of operations for the period? That is what I have to calculate. Warehousing cost for the first day of operations. Okay, let's read the question. Meadow Company uses an activity-based costing system. The budgeted cost for the warehousing for the next 6 months are these many dollars, of which this much relates to handling receipts of materials. The balance is for the issue of goods to the production. In the same period, it is expected that there will be 3,700 number of receipts and 2,500 number of issues. So this is the total which will happen in the entire month, guys, right? Then it is telling me information with respect to the first day. So first day, we will be doing the receipts 14 times and issues will be done 6 times. So I have to tell what is the cost for the first day. What I will have to do is, I am given with the cost that's with respect to handling of materials. Handling of materials receipts will be 3,700 in total. So what I will do is, I will note down the information that is given to me. So handling the receipts is going to cost me how many dollars in total? 215,414. Right. And then the other cost which has been given to me is related to the issue. So issue cost. Issue cost, how can I find that out? Total is given to me as 356,014. Out of this total, this much relates to handling. So the remaining balance is for the issue related costs, right? So now I am given with this information. Now, how can I proceed further to give my answer for what's the cost for the first day of operations? I need to know how much money is being spent on one receipt. So if this is the total money that's being spent and how many are the number of receipts in total? Number of receipts for the whole month is going to be 3,700. 3,700. That means the cost per receipt. How much will it cost for the company for one receipt? This is the total cost. This is the number of costs. So per cost is 58.22. Similarly, with issue cost, the total issue cost has been spent over 2,500 number of issues. So I will place over here number of issues and I will write 2,500. Now I will find out the cost per issue. The cost per issue is going to be the total cost divided by the number of units. So this is the cost per issue. Now what do I have to do is, for my first day calculations, I am being told that 14 is the number of receipts, 6 is the number of issues. 14 receipts and 6 is the number of issues. So what is the cost going to look like? Per receipt, it costs me 58.22. So I'll multiply this with 14 plus 6 issues have been done. Per issue, it is 56.24. So I add both of the numbers together and this is going to give me 1152.52, which will make option D as my final answer. So this is how we are going to do our workings. Understood, guys? Any queries in any of the steps, please ask me. Are you all with me? Aaron, Aman, Gina, Janani. Okay, great.
Yes, ma'am.
Great. So we move forward now towards the third question. So this you people will now solve on your own. What is the budgeted machine setup cost per unit for product S? So RS company has recently introduced activity-based costing system. RS company manufactures two products, details of which are given to us below. The production per year is given in terms of number of units. Batch size is given. That means in one batch, how many number of units we make. So for product R, in one batch, we make 100 units. And for product S, in one batch, we make 50 units. Machine setups that we need per batch are told to us. Processing time per unit is given to us in terms of minutes, and the annual cost for the two activities are provided to us as follows. Machine setup is going to cost me $180,000 in total. Processing is going to cost me $108,000 in total. I have to tell that what is the budgeted machine setup cost per unit for product S. So what you have to do is you have to do your working with respect to the setup related cost. You have to find out how much out of this 180,000 belongs to product S, and then you have to give per unit in terms of the answer. So whatever total cost belongs to product S, you will have to divide by the number of units to find out the per unit cost for product S. Take 2 minutes, do your workings, let me know your answers, then we will discuss this together. Okay, so I'm starting to receive your answers. Let's discuss this together. We have to find out the machine setup related cost for product S. So first, I need to see what is the driver for the machine setup cost. Machine setup cost depends upon how many times I have to do the setups. So let me find out how many times the setups are going to be needed. So this is question number 3 that we are solving together. We are talking about two products. I have product R with me and then I have product S with me. The very first thing that's been given to me is how many number of units that I need to produce. So the number of units in total I need to produce is 80,000 and 60,000 respectively. Then I'm being told what is the batch size like. So the batch size is 150 respectively. That means if I want to produce these many number of units, how many batches am I going to need? So the number of batches will be To produce 80,000 units, I'm producing 100 units in one go. So I will have to produce 800 batches in total. Same way, I want to produce 60,000 units in total, but in one batch, I'm only able to produce 50 units. So I will have to run the batches 1200 times so that I'm able to get the total of 60,000 units that I need to manufacture. So this is the number of batches. Then further, it's given to me that per batch, I need to do 3 setups each. So number of machine setups. So if per batch requires me 3 setups, then 800 batch will require me 2400 setups. Similarly, if per batch requires me 3 setups, 1200 batches will require me to do the setup 3600 number of times. So that means how many times am I doing the total setups? 6,000 times in total I will have to do the setup. So the total setup cost is given to me. Total setup cost has been given to me as $180,000. So equals $180,000. Then this is the cost for doing the total number of setups, that is 6,000. So that means my setup cost per unit, is going to be 180,000 divided by 6,000, which gives me a setup cost per unit of $30. So now guys, for product S, how many times did I have to do the setup? Total setup cost for product S. So for product S, 30 is the cost per setup, and I had to do the setup 3600 number of times. That means out of the total setup cost of $180,000, $108,000 was incurred because of product S. Now this would have been my final answer if the question asked me for the total machine setup cost for product S, but it's asking me the per unit cost. So this cost has been incurred not to make 1 unit of product S, but to make 60,000 units of product S. So I can say that setup cost per unit of S is going to be, this is the total for 60,000 units. So per unit will be 60,000 divided by, 108,000 divided by 60,000 number of units, which is going to give you $1.8 as your final answer. So this is how we are going to do our workings. Many of you were getting 1.5 as your answer. Did you people realize where you were going wrong? Yulia and Kia have answered this correctly. Aman, Jeena, Janani, what was the mistake that you people were making? Where did you go incorrect? Were you able to find out? Just tally step by step. Which step did your calculation differ from mine?
Number of batches calculation.
Yeah, so you people missed out the fact that we will be working in the batches. Okay, Janani forgot to calculate the number of machine setups. Yeah, so because you did not calculate the number of batches, then your number of setups also went incorrect. Because of that, your final answer was not right. Now, are you people clear with all of the steps? Shall we proceed to the third question? Are you all with me, everybody? Aaron, Aman, Jeena, all good? Okay. Let's move forward now to the fourth question. This is very easy. We have to give our answers as true or false. The very first statement tells you that ABC recognizes that some overhead costs do not depend directly on the volume of output. What do you people think about this? Very easy. Come on, I want answers from everybody. What do you guys think about the first statement? This is absolutely true. This is the core principle behind ABC. ABC says that overheads do not depend on volume of output, they depend upon cost driver. That is what we try to find out in the ABC costing method. The second statement tells you the cost of implementing activity-based costing may exceed the benefits for some businesses. So because it is expensive, sometimes it's possible that the cost will exceed the benefits. This is also true. Sometimes it does happen, especially for which sort of companies. There can be two cases: when the overheads are too much or when the overheads are too less. When will ABC be of a lesser benefit? When my overheads are too less. Absolutely right, Julia. So this is why both of the statements that we see over here are absolutely correct. Now we move forward towards the question number 5. Here you have to use activity-based costing and find out what is the overhead cost per unit of the product. So overhead cost, only you have to talk about overheads, do not include direct costs over here, and you have to give your answer in per unit terms. So the budgeted overheads for Nambro company for the next year have been analyzed as follows. This is all in 3 zeros that have been removed. So $450,000 worth of order processing related costs. Then you have production run setup related costs, and then the machine running cost. It is anticipated that the machines will run for 32,000 hours, 6,000 purchase orders will be processed, and 450 number of production runs will be there. One of the company's products is produced in batches of 500. Each batch requires a separate production run, 30 purchase orders, and a 750 number of machine hours. So again, this is very easy. Do your workings, take 2 minutes and let me know your answers. Then we will discuss it together. Okay, I'm starting to receive answers. Another 10 seconds, then we discuss this together. Okay, great. Receiving similar answers. So I hope you people have calculated this correctly. Let's also discuss this together. Overhead cost per unit has to be calculated. This is question number 5 that we are discussing together. So I have to talk about the overhead cost per unit for this product, which they have spoken about. It's produced in batches of 500. Every batch requires a separate production run. So I need one run for this batch. I need 30 purchase orders and I need 750 number of machine hours. So for this, I need to know how much it costs me per production run, per purchase order, and per machine hour. So what I do is I write down these totals, divide them with the number of units to find out what is the per purchase order, per production run related cost. So what I'll do is I will write down the different costs that are given to me: purchase order processing costs. Then I am being told about the production setup related cost. And then I am being told about the machine running cost. What are these amounts looking like? It is 450,000, 180,000, and 640,000. 450, 180, and 640, right? And then they are telling me that I need, the machines are going to run for 32,000 hours. So that means the per hour cost is going to be the total cost divided by 32,000 number of hours. So per hour, it's going to cost me $20. Similarly, 6,000 purchase orders will be processed. So that means per order, it's going to be 450,000 divided by 6,000 number of orders. And then further 450 production runs will be there. So per setup, it's going to be this number divided by 450. So this is the amount of money that I'm incurring per setup. Now, if I calculate the cost of one batch, what are the things that I need? I need one setup. I need 30 purchase orders and 750 machine hours. 30 orders and 750 hours, right? These are the things that I require. How much will one setup cost me? One setup is worth $400. How much will 30 orders cost me? If one order is 75, 30 orders will be the product, that is 2250. And if 1 hour costs me $20, 750 hours will cost me this much amount of money. So that means this is the total cost for producing one batch for me. Now the question is asking me what is the cost per unit. So in one batch, I'm not making one unit, I'm making 500 number of units. So if this is the total cost of the batch, cost of one batch, then the cost per unit will be the total cost divided by how many units I'm preparing in one batch. It is 500 number of units. So I divide this with 500 and I get to 35.3, which is option C that I'm going to mark as my answer. Okay, Yulia says this is a lot of work, plus we do not get an Excel in the exam. Yes, this is a very important concern, which I think another student had shared with me, that the section A and B that we are given with, you do not get any Excel to do your workings. What you are provided with is a scientific calculator that you can take to your exam hall. It's also given to you on your exam software. That means on your computer on which you are attempting the exam, you can open the scientific calculator. But you're also given a rough sheet of paper. So how you're going to do these workings in your exam? Obviously, I cannot show you how I will do these workings on a rough sheet of paper because I am presenting my screen to you over a computer. I cannot tell you how do we solve this on a paper. So definitely, how do you people practice these questions is, whenever you're solving any section A and B related questions, do not use Excel at all. It is my limitation that I am presenting to you in an online mode, so I can only use this for my calculations. But while you people are doing your practice for section A and B, only keep your calculator and a pen and paper with you. So calculator is something which your hands should be designed, your fingers should get such used to using your calculator that you're able to do your calculations in a very fast manner. Keep one calculator that you start using from day 0 onwards, and this same calculator you should take to your exam hall also. So what will happen is, over these months that you are practicing, you will develop muscle memory. Your fingers will just know where to tap so that this number will be pressed. So use that one single calculator, take a pen and paper with you whenever you're solving section A and B related questions, right? So this is the only way by which you will become used to the way that you're going to have to work in your final exam. Okay. Any doubts in this question? Are we good till here, guys? Question 5 is understood?
Yes, ma'am.
Okay. Now we proceed forward to the sixth question. So, which of the following statements is or are correct? The following statements have been made about activity based costing. Introducing ABC will always reduce costs in the short term. This is first statement. Second statement is that if the cost of a product or service using both ABC and absorption costing is same, there will be no benefit gained from adopting ABC. Think very carefully, look at both of the statements very closely, and let me know your answers. Okay, great. I have quite a few answers in the chat box already. You people are saying that both of the statements are incorrect. So many of you have given me the answers. Can anyone let me know the reason why the first statement is not correct? Why is the first statement incorrect? Would anyone like to give the reason?
Ma'am,
Yes, Aman.
because using the ABC, if we are having the cost, like if we are selling higher before, then the cost which is showing by the ABC, like we are selling 82 and the cost showed us by ABC 73, but before absorption costing shows us 82. So it's not always like we reduce cost. It's sometimes the cost is already lowered in the using the absorption method.
Um,
So
okay, all right. Let's look for a better reasoning behind the same. Let's reread the first statement. First statement tells you introducing ABC, have a look at where I'm giving the emphasis, will always reduce the costs in the short term. Does anything on planet Earth come with a guarantee that your costs will be reduced?
no.
Whenever you see the word always, be extra cautious. The things which will always happen, they are very less, they are very limited in nature. Whenever I am introducing ABC, guys, what was happening in the earlier questions also that we were doing, the total cost that the company was spending, that was remaining the same, just that we were dividing the costs in a different manner. But the overall total remained the same, at least in the short term. But in the advantages, we have spoken that because I know where I'm spending how much amount of money, because of that reason, I'm able to control my costs, but that happens over a long term duration. And that is also not necessary. It may or may not happen. So, yes, Yulia, you're absolutely right. It's the wrong use of the word always. Nothing is guaranteed. This should always make you raise your eyebrow that why do you think that this is something which will always happen? No, this is not something which will always happen. So that's why the first statement over here is incorrect. Then if you talk about the second statement tells you that if the cost of a product or service you find is same as per ABC as well as absorption costing, then there's no benefit of using ABC. What do you people think about this? You're all saying that this is false, but what is the reason that you give for this?
Because we are not just getting to know the costing, like it comes with various advantages also, like detailed bifurcation of cost per products, like that.
Right. Right. And also, when we get to know where we are spending how much amount of money, we are able to control our costs also in a better manner. We are able to take better decisions. We are able to reduce our costs in the long term. So it's not necessary that if the costing is coming out to be the same, there's absolutely no benefit. There will be benefits which will be in other areas. So it's not right to say that if the costs are same, then we are not getting any benefit. So my answer has to be C. You people were absolutely right. right, have a look at their reasoning also. One is incorrect. Why? Because some costs will be fixed in the short term. So for such costs, it will only be possible to achieve a reduction in the longer term. Like how we were discussing, when we are able to have a look how much money we are spending where, we will be able to control the costs better, but that will happen gradually, not immediately. And then the second thing is that if the cost of the product or service is same as per both methods, why are we getting other benefits? We will get a greater insight into the causes, into the reasons why the cost is being incurred. This will allow the managers to control the cost better and managing the causes of the costs. So this is other benefits that we will get. Not if the costs are same, it does not mean that the benefits will be zero. We will be getting benefits which will come in other forms. So neither one nor two is correct. Are you all with me till here? All clear till here, guys? Should we head forward? Please let me know if you have any doubts.
Yes.
Okay. So this is the seventh question now in front of you. What is the distribution cost for this customer? That is what you have to answer. So Thieman's company uses activity-based costing. The budgeted distribution-related costs for the next year are as follows. So transport cost is this much, order processing cost is this much, total distribution comes out to these many dollars. It is estimated that 325,000 orders will be processed in the next year, and the delivery vehicles will travel these many number of kilometers. A customer has indicated that 138 orders, each requiring an average journey of 122 kilometers, will be placed next year. So I have to find out that what will be the distribution cost for this customer. Again, this is very easy. Take 2 minutes, solve and let me know your answers. I am waiting. Then we will discuss this together. Okay, I'm starting to receive answers. I have the very first answer from Yulia. Waiting for others. It's been 2.5 minutes. That's what you people will get while you are solving your questions in the exam. So you people should be done by now. Okay, great. Receiving more similar answers. Let's discuss this together. This is question number 7. So we are being told to find out the distribution cost for this customer. He will be placing these many orders and the number of kilometers we can find out. One order will be this much kilometers. So total kilometers will be 122 times 138. Now I am given with the transport cost and the order processing related costs. So transport cost and the order processing cost. So order processing cost is given to me as 1573 And then I am being told 2631,200. 2631,200. Now, this transport cost is basically incurred on how many kilometers we travel, and order processing cost will be the number of orders that we are handling. So, per order cost will be, if this is my total cost, per order cost will be divided by the number of orders. So, number of orders is $325,000. So, this is how much it's costing me to process one order. And if I want to find out my cost per kilometer, total cost divided by the number of kilometers. So, how many kilometers? 1495. So, this is the cost that we are incurring per kilometer, this over here. So, now we can do the working for this customer. Customer will be placing 138 number of orders, and with respect to the kilometers, so he is saying that on an average, one order will require a journey of 122 kilometers. So total kilometers will be 122 times 138. So these many number of kilometers. So that means how much will be the cost for this particular customer? Firstly, related to the orders. So this is the cost per order. He will be placing 138 number of orders. So this is the total ordering cost that I will charge from him. And with respect to transport, how much will I take? This is the cost per kilometer, and this is the number of kilometers that will be traveled because of this particular customer. So how much in total are we going to charge? We are going to charge 30,299, which gives me my closest answer to be option B. Right? So all of you who were giving your answers, Yulia, Aman, you are both right. If you have others, if you have any difficulties, please let me know. Are you all with me till here? Any doubts in any of the steps? All clear, guys? Okay. So we move forward to the second last question for today. What is the budgeted overhead cost per unit for product D using ABC costing? So the company makes two products, C and D. The following information is given. Production units is 1,000 and 4,000 respectively. Labor hours per unit is given to you, that 8 hours per unit for C and 10 hours per unit for D. Number of production runs you need is given to you. Number of inspections that you need to do is given to you. Total production setup costs have been told. Total inspection costs have been told. Other overhead costs have been given to you. And they are telling you that the other overhead costs are absorbed based on the labor hours per unit. So you have to tell what is the budgeted overhead cost per unit of D using the ABC principles. So take 2 minutes, do your workings, and let me know your answers. Then we will discuss this together. Okay, Julia says this is my answer, but I have to admit that I am using Excel. Um, for now, if you're using it, it's okay. But for any practice that you do later on your own, please ensure that you slowly and gradually switch to your calculator and pen and paper. You have to be in the habit of using your calculators while you're preparing for your ACCA skill level at least. In professional level, the calculations get reduced by a huge amount, and you have Excel given for each and every requirement that uses numericals. So it will not be a big issue in the professional level, but at least for the skill level, you have to be using the calculators. Okay, so let's discuss this one together. You have to find out the budgeted overhead cost per unit for product D. Yes, Aman?
Could you please show the options and then
Yeah.
select? Okay.
All right. So let's go and solve this on our own. So we are being told that the budgeted production is 1,000 and 4,000. So let me create two columns, C and D. Production that we are going to do is 1,000 and 4,000 respectively. Then we are going to use labor hours per unit 8 and 10. Labor hours per unit is 8 and 10. So that means the total labor hours that I will need for both of the products will be, if 8 is per unit, for 1,000 units, I will need 8,000 hours. Similarly, for the product D, I will need 40,000 hours. Then let's have a look at the other information, number of production runs. Number of production runs that we will require will be 13 and 15 respectively. And then we are being told the number of inspections are 5 and 3. Number of inspections are 5 and 3. So we are being told the total costs that are provided to us. The total setup related costs are $140,000. Now, total setup cost depends upon how many times we are doing the runs. More runs we will do, more setups we will have to do. So what is the setup cost per run? So how many runs am I doing in total? 13 plus 15, that is 28 times I am running the cycle. So 140,000 is being spent over 28 production runs. That means the total the cost that I'm incurring per run is $5,000. Same way the other cost is given to me with respect to inspection is 80,000. Total inspection cost is $80,000. So that means the cost per inspection is going to be 80,000 divided by how many number of total inspections are we getting done? 5 plus 3. That is 8 inspections. So 80,000 divided by 8 gives me 10,000 number of inspections. Further, let's have a look at the other costs. Other overhead costs are $96,000. Other overhead costs are $96,000, and we are being told on which basis do we have to absorb this? We have to absorb this on the basis of labor hours. So cost per hour of labor is going to be 96,000 divided by how many total labor hours we are using. So 48,000 is the total labor hours. 96,000 divided by 48,000. This is the cost that I'm incurring per hour. Now, this is what we have done as part of the steps that we have learned with ABC. Now, when I have to do my workings for product D, I can simply divide this cost accordingly. So for product D, I am using 40,000 number of labor hours. So other overheads, if per hour is 2, so for 40,000, it will be 2 times 40,000, that is $80,000. Then if I talk about the inspection related cost, then the cost that I'm incurring per inspection is 10,000. For product D, I'm getting 3 inspections done. So 30,000 will be spent over D. Then the setup related cost. So setup is upon how many number of runs I am doing. Per run costs me 5,000, and for product D, I am doing 15 production runs. So this is the total cost which will be incurred over product D. Now the question, this would have been my final answer, but the question asks me per unit of product D. This is spent to manufacture a total of 4,000 number of units of product D. So the total cost per unit of product D will be this figure divided by 4,000, which will give you guys the answer as 46.25. Right? So this is the overhead cost per unit of product D using ABC costing. Any doubts in any of the steps, please let me know, guys. Are you with me till here? Okay. Great. So we head to the last question for today. Which three of the following statements about activity-based costing and traditional costing systems like marginal costing and absorption costing are correct? So these are 6 statements in front of you. You people have to go ahead and pick 3 statements which are right. Give this a read. All the statements, go through them very carefully. Think and let me know which ones are the 3 that we should be picking up. Okay, great. I'm already starting to receive responses. Okay, great. Neha says B and E, rest not sure. Okay, no problem. So let's discuss the statements one by one. The very first statement says no overabsorption or underabsorption of overheads can occur under ABC. What do you guys think about this statement? Will this be true or will this be false? What do you guys think about the first statement? No underabsorption or overabsorption is possible. This is false. Why? Can anyone give me the reason? Okay, great. Aman is using the elimination technique, which is very nice. Give me the reason why A is not right. Why is it possible that overabsorption or underabsorption can happen?
Actual cost can differ the total cost we think they absorbed.
Absolutely. There is a possibility that whatever I have budgeted, that may not be the very same as my actual cost. I was thinking I will spend $80,000, but I ended up spending $100,000. So my absorption will be only of the $80,000, remaining $20,000 which I have spent extra, that will never get absorbed into my product. So it will lead to an under absorption. So under absorption, over absorption, both are absolutely possible under ABC. Hence, it cannot be my answer. The last statement, Aman says we can clearly eliminate option F. Option F tells you both ABC and marginal costing treat the fixed cost as the product cost. So what do you people think about this?
No, because under absorption cost, I guess we can absorb fixed and variable, but in marginal, we can only work with variable.
Absolutely. Marginal costing considers the fixed cost to be what is the term for that? It's a period cost. Very good, guys. Very good. So we eliminate option F. Okay. Now Aman says we can also eliminate option C. Okay. Let's read what does option C tell you. Option C says that ABC is not suitable for those businesses which are into providing services. What do you people think about this one? This is false. Why? Because when we were covering the concepts, we have studied that ABC can be applied to service sectors also, even though we might face a little bit of difficulties because the nature of services is different from the product. Services are intangible, services are subjective, they are not homogeneous. So there can be problems, but does it mean I have to eliminate it altogether? No, I can still use ABC in the service-based businesses. So we have successfully eliminated option A, option C, and option F, which has led us to select option B, D, and E as our answers. Let's understand one by one why all of these three statements have to be the right answers. Option B tells you that ABC is useful for those businesses which have high overheads as part of their cost structure. So we were just discussing this. Yulia had correctly told me earlier that only those businesses will not benefit if the overheads are of a low proportion. But if overheads are a high proportion in my company, then a large amount of money will be divided on the right basis. So definitely it will give me a benefit. So ABC is very useful in those businesses where the proportion of overheads is a high number. Then if you talk about statement D says marginal costing will understate the true cost of a product when we are comparing it to ABC. So why is this correct? Would anyone like to give me the reason for this one? Statement D? I would appreciate if you people unmute and give me your answers. Go
As
ahead.
it does not consider the fixed cost. It only considers variable cost, so it undermines.
Right. Marginal costing only considers the variable cost related to a product. It does not consider the fixed cost. So when I compare, marginal cost only includes variable cost, but the ABC cost includes both fixed as well as variable cost. So marginal cost will be a lesser number because the fixed costs are clearly missing from it. So this makes my statement D as the right answer. Then if I move to statement E tells me ABC is better than absorption costing in understanding what causes costs to be incurred. So this statement is also right. Would anyone else like to give me the reason for this? Aaron, Janani, Kia, Neha, Trishni, Yulia, would anyone like to give the answer?
I think
Go ahead. Whoever has joined with the name of Na, you can go ahead if you want to give me your answer. Kia says, is it because of the cost drivers? Yes, that's absolutely right. When I'm using absorption costing, I don't have a look at what is the bifurcation of my total overheads. If my total overheads are $1 million, how much of it is because of the order processing? How much of it is because of the transport related costs? But when it comes to ABC, the total $1 million will be divided into different categories of the costs. And further, we will investigate what is the reason why those costs are being incurred. So order processing costs will be because of the number of orders that I'm processing. More orders that I process, more will be the order processing cost. So ABC definitely it's better than absorption because it helps you understand what is the reason behind the costs that are being incurred. So yes, B, D, and E, these are the ones that are going to be the correct answers over here. So for all the 6 statements that you people see in front of you, we have discussed with reason why B, D, and E are correct and why A, C, F cannot be our answers. If you have any queries, please let me know. Any doubts, any queries? Please let me know, guys. All clear? Okay. All right, guys. So this is what we had as part of our agenda for today. If you want to ask anything before we conclude and then we again meet the next week, you can let me know. Otherwise, this is where we are going to stop. Keep practicing, keep covering the concepts as I'm telling you to do as per the planner. And I'll see you the next time. In the meantime, during the week also, I will be connected with you to tell you the daily targets, to keep taking follow-ups from you guys. Okay?
Ma'am,
Yes, Aman.
do you have the soft copy of BPP exam kit latest one?
I do not have the latest one, but I have the immediate previous version of it, which can be continued to be used because no syllabus changes have been made.
Okay, and can we expect marginal costing calculative questions in section A and B in exam?
Anywhere, anything can be tested anywhere. That's the beauty of the PM paper. So prepare everything, every syllabus area in a manner that no matter where it gets tested as part of your paper, whether section A or section B or section B, you should be ready to answer that. You're more than welcome, guys. Kia says, can you tell the part for practice from exam kit for chapter 15? So yes, Kia, as and when we are, because the exam kits that we have, they are divided unit wise. Only on Study Hub we have the chapter wise bifurcation. So till the time we are not done with an entire unit completely, it will not be fair to move to the kit because you might not be able to answer some of the questions because we are yet to cover the concepts. So I'll let you people know once we are done with one unit, then you can get started with the practice of that unit from the kit. Right? Okay. All right, guys, you're most welcome. Be consistent, keep showing up every day, and let's get the PM paper in the June attempt. I'll see you people the next time. Bye bye. Enjoy the rest of the day.
Thank you, ma'am. Bye.